All right, good afternoon, Quasar Markets Live. Kevin Green, Schwab Network. Here we go. Last week, volatility, Kev. Silver was bright and shiny. Not so much this week, right?
Yeah, we're starting off a little bit weak. Obviously, that move on Friday was historic, the biggest move to the downside that we've seen since the 1980s here. And this is one of those situations where the technical setup, and I've been talking about this over the last couple of weeks, right? The technical setup was actually very interesting. You started seeing these really aggressive intraday moves, not only to the upside, but to the downside on very large volume, exceeding what we've seen over the last 10 years, 15 years or so. And that's usually indicative of a potential blow off top. And that's exactly what we saw on Friday. I think there was not only just selling and deleveraging within silver, but you also had some double levered ETFs that kind of created maybe a little bit more of a scenario that created more of a
Yep.
sell off scenario, if you will. And at the end of the day, I think we had a clearing event. If you kind of look at the daily chart on Friday, it was a textbook touch on the 50-day moving average. Buyers stepped in, right? It was still a bearish candle, but buyers did step in. Today, we did see volatility for silver coming in just a tad bit. So we didn't see a massive move. It's still, for the most part, kind of down. We didn't see a massive move here. And what I'm curious to see is if we consolidate at these current levels for, let's say, a week or 2 weeks or so, make another attempt higher, and then potentially either break out higher or then see a bigger breakdown within silver. What's interesting, if you kind of go back and look at the history of silver, it's never just a one and done, everything's over. We usually have a major correction situation that takes place, 15, 16% intraday move to the downside. You may have some follow through that next day, a consolidation, a reattempt higher, and then we gradually step down to the downside, and that starts the bear market for silver. So an interesting trade setup. Unfortunately, some people did get run over here, but the call side on the SLV, Steven, is actually still it's still call side skew if you're looking at the premiums here, especially for the out of the money. So market's kind of pricing in that maybe some buyers try to step in here and buy and load up on the SLV calls to the upside rather than maybe more of a downside move.
Yeah, it looks like it's in the 1 hour charts. Looks like we're going to see a little bit of a pennant flagging here a little bit. Interestingly enough. All right. The Dow Jones today, the markets were a little weak this morning on the open and ended up higher here.
Yeah, especially when you saw the overnight move yesterday. I mean, it was like 5 o'clock, 6 o'clock my time, Mountain Time. Markets are down over 1% if you're looking at the S&P 500. But individuals came in, bought the dip, and I would
Yeah.
say that the action today was a little bit mixed when you're looking at the performance. And it wasn't the Mag 7 was leading everything type of day. In fact, Nvidia got hit pretty hard, especially on an intraday basis. About the last 2 hours of the day, started seeing some aggressive selling taking place. But Apple touching that 270-ish area, really strong reaction for Apple today. It seems like this is the actual earnings reaction that we expected after their earnings announcement here. And you are seeing, other companies like Oracle, which is not a Mag 7 name, but had some news, saw individuals kind of selling out. But if you see this broadening out taking place, it's kind of a reverse of what we saw last week. Consumer staples led the way up 1.5%. I don't know if you saw that Walmart move today. It was one of the best looking structures that I've seen in a very long time when it comes to Walmart and just the consistent bid throughout the day. Industrials also doing pretty decent. Financials, and I think financials are just kind of consolidating, trying to break out here after that sell-off that we saw 2 weeks ago. Capital One catching a little bit of a bid. So it was an interesting mix to the day. I'm not sure how much we hold up in this type of environment. I'm still a little bit skeptical here, Stephen. I'm always going to be skeptical, but I'm still a little bit skeptical here. For those that don't know, if you look at a 10-year, 15, 20-year seasonality chart, you layer your VIX on that. You can see the latter half of February, starting around February 13th, 14th, is actually when we do see volatility re-rating aggressively higher. And so I think that's still going to be on the horizon here. If we're not able to capture that 7,000 level with some conviction, I think we have one of those look above and fail type of moments. And we go back. I mean, we've been testing the 20-day, we've been testing the 50-day, we've been closing above both of those moving averages. But eventually, I think that we might actually still see that 20-day and 50-day come into effect here, and we challenge it and potentially move over.
Yeah, I mean, you got companies like Royal Caribbean up 3% today. I mean, it got smacked a week ago, and actually a few months ago back, and a week ago, and here we go back up again. So even the consumer stocks are up. You talked about it from the perspective of utility, but Boeing also still pushing higher here.
Yeah.
Obviously, the war drums are banging Lockheed Martin up again up today. So it's been a kind of a nice little run here over the last I'd say even last few months actually.
Yeah, Lockheed Martin has had actually a really decent move, but it has been a laggard within the defense space for a
Yeah.
long time. And so I think this is also a little bit of a catch-up trade. They do have some headwinds when it comes to the product offering, some of their product offerings. But if you kind of look at it, it broke above that let's say 620-ish area. This is the breakout zone for Lockheed to potentially move higher here. On the other side of that, if you go to RTX, which is, you can make an argument probably fundamentally what they report their product suite right now and their guidance moving forward, probably one of the better operators within the defense space. You can tell that by the chart when you're looking at RTX, and it actually did recover this morning. It was actually down a considerable amount here. It was down. I thought it was down about, yeah, it was down about 2%. It actually did catch a bid towards the latter half of the day. The defense stocks, I think, they have a lot of tailwinds. Even if you take the geopolitical risk events out of it, they still see a ramp up in a backlog of orders on an international basis. And so I think that's going to be a tailwind for those names here. And yeah, go back and look at consumer staple stocks. I mean, Hershey was up 1.2%. I mean, it was a day where we sold out of some tech, sold out of some communication services, broadened out here a tad bit. I think if you're a bull, you like to see that type of action.
Yep, and just glanced over at the screen here over CNBC, and they were saying Bitcoin in the doldrums again. Bad boys over in Bitcoin. What you guys saying at Schwab?
Yeah, I am actually a little bit more optimistic when it comes to the Bitcoin chart.
Okay.
I don't really focus on the Bitcoin fundamentals. I'll just be kind of frank with you. I think Bitcoin is nothing but a liquidity pool and a liquidity gauge for the market. If Bitcoin goes up, liquidity is usually following that for the broader, not only equity market, but also the bond market. If we see Bitcoin coming down, then generally says that liquidity in the broader market's also moving to the downside. But the reason why I'm a little bit more constructive on a technical basis, if you bring up a 3-year weekly chart, the 75,000 level, 74,000, 75,000 has been an area of support in the past. That was actually the April lows that we saw last year. That's actually also a gap up high for looking at the futures contract. So I would not be surprised if you kind of have that weekly, that we actually do get a retracement bounce to the upside, maybe even up to that 105,000 level. And here's the reason why I say that. If you look at that weekly, you can make the case that maybe a potential head and shoulders pattern is actually developing here. And we've already made the left shoulder. We made the head, right? That 127,240 is the head.
Got it.
Then we are trying to develop that right shoulder, but the right shoulder has not developed yet, right? You develop that right shoulder when we have a pivot in the market. And then you look for an area of resistance that could develop or create that right shoulder, a well-defined right shoulder, in my opinion, which I would say first level, maybe 98,000, 99,000. I would say the next defined level, 105,000, 107,000. And then you start saying, okay, well, if it fails from there, you have your neckline then, once again, it's going to be 75,000. Breaks below that neckline, then you're starting to look at around 50,000. So that's how I look at it. I'm actually, once again, I'm a little bit more constructive, which is a little bit counter trend to what I said earlier about the equities, that I still am concerned about them. Because once again, if Bitcoin's moving up, liquidity generally moves to the upside, in my opinion. But I could make the case that potentially a technical bounce could actually take place. And you also have two weekly gaps as well. You usually don't have gaps on weekly charts that are well defined, that do not get tested that often. And we have two of them over the last 2 weeks. So at least going back and trying to retest those, I think would be something there.
All right. I love it. I love it. Love it. Love it. Okay. Kevin, we'll see you right back here next week, my man. Thanks so much.
Appreciate you.